Hey folks, David Frost, My Strategic Forecast, here for another episode of Common Sense Market Analysis. Today is Wednesday, July 8, 2015. Oh boy. So we didn't get the follow through that at least I was looking for in yesterday's video. I was looking for follow through. Hopefully we would get a jump above the neckline and that would be all signals go for another rally. And we got the opposite. In fact, ironically enough, after I did the video last night, I took a look at the futures shortly thereafter, and they were down like 15 points. And I said, oh no, I gave the market a mush. And lo and behold, we had a pretty good down day today, or a pretty bad down day. Any way you look at it, we're really in the same position we were before. So let's take a look at it. Now we're comfortably below the neckline on all three indices, the cash index, the futures index, and the spider index, or the spider. So forget the dividend thing I talked about last night. While that was valid, it doesn't matter now. So basically, here's what you have. If we close the day below yesterday's low, there's a very, very high probability we go right to our target here. Whoops, that's not what I wanted. We go right to our target here inside this band, okay? So we're going to look for 202 to 200. You want to split the difference. It's around 201, maybe 201.50. I would begin thinking about purchasing in the neighborhood below 202. However, you must recall that I mentioned before, think ES contract for a minute, and I mentioned that there is a number that has nothing to do with the head and shoulders pattern. This is the head and shoulders target. This is where we would go on the head and shoulders target, and call it 201.50. But there's another calculation I had on the ES contract, the futures contract, that brings us all the way down to 1975, 1980. Do I think we're going to get there? I think it's a possibility, but I don't think it's as high of a probability right now as the spider trading down here, which would put the ES contract down in the 200 neighborhood, 2000 neighborhood, maybe slightly above. But could we trade lower? Yes, we could. So if you're going to trade that on the long side, and I think it's a good buy area, even though you might dip lower, but that lower dip may be an intraday low. It may be one more day to get there. But if that happens, well, here's what I would do to prevent getting feeling really bad about buying the market and it continuing lower. I'm going to probably do this. I'm going to buy a half a position at around 201.50, give or take. Okay, I have to see what the market's doing as it gets there. You know, you can't just pick a number out of the sky and put a blind order in and without seeing how the market's reacting down in that level. But what I would normally do, what I'll probably do, is buy half a position that I would normally buy in this neighborhood here where the X is. Okay, and then if the market continued lower, I would look to buy my second position at 1980, let's say. Okay. If the market closed below, if the futures closed below 1975 on a daily closing basis, I would probably stop out because something else was developing. But I don't think that's going to happen. So, however, the flip side is, if I'm wrong and we don't get to this level, we don't close below yesterday's low, and we do not get to this level and the market does reverse higher, I'm also a buyer on a close above the neckline of this head and shoulders pattern, which I would have been today had we gapped up above there. But that didn't happen. So that's where we are. It's basically, in my mind, I'm going to call it a bracketed market. And what I mean by that is I'm either going to buy down here or up here, and I'm doing nothing in this neighborhood here. There's too much... There's just nothing to do here. There's nothing telling us the market's going higher until we either get down here or close above here. It's just that simple. There's just nothing else to do. So hopefully that's helpful. And by the way, if you pay attention to the numbers I have on this chart here, on the spider, my purple trend lines, you'll notice that, I forgot to mention yesterday, I updated the numbers. I redid some calculations. So you might want to just update your notes if you take notes on my numbers or put numbers on your own charts. I just updated them from new highs and new lows. And so just be aware of that. And I think we can move on to other markets. Okay, so that should cover the S&P 500. Any questions, shoot them over to me, but hopefully that was clear. Let's go to the gold market. So here's the deal in the gold market. It's interesting. The gold market is weak, and it may remain weak, and we probably, well, I shouldn't say probably, we have to trade above 1174. That story is not going to change. And I know this is going to sound strange, but I did some calculations, and based on the fact that I believe today should have been a daily cycle low in gold, and as you know, they work out about 75 or 80% of the time. And we'll get to the bond market in a few minutes, which the bond market is now 2 days past the cycle top. So we'll talk about that when we get there. So they don't always work out. Nothing works out 100% of the time, but they work out a lot. So here's what I'm going to say. I did some calculations, and if anybody likes to trade in gold, I think you'll find the gold market between tomorrow and Friday, and it could happen in the overnight session. There's no way to tell when it's going to happen, but I think we'll find the gold market trying to trade back to 1174. I'm full disclosure, I'm long gold right now, only for a trade up to, I'm going to take it off at 1170. In fact, my profit target is at 1169.50. Only because I don't like to go to the round numbers, because sometimes they don't get hit. So it's not to say it can't trade to 1174 or higher. I'm just happy with that profit target because I'm not convinced we're out of the woods in the gold market. But my stop, I'll have you know, and you always have to have a stop, because if the market reverses and you're sleeping, you don't want to find yourself in a huge loss scenario waking up in the morning. Futures markets are tough to trade. You always have to trade with stops. Never, ever, ever, ever trade the futures market without a stop in place. You can't walk away from those markets and assume everything's going to work out, because the one time you do, it won't. So my stop is, bear with me, I'm actually looking at my stop now. My order is 1149.80. So I have a stop at 1149.80, and I have a profit target at 1169.50. Let me just double check that to make sure. 1169.50, yes. Okay, so full disclosure, that's my current order, and I'm looking for higher prices in gold. Not anything dramatic, not anything necessarily sustainable. I'm actually looking for it just as a quick trade. Okay, so that's what I think. That's what I have in gold. Until we see a more definitive pattern, I don't know anything more about a sustainable long or short side. I just think we're going to see a pop sometime between now and the end of the week. That's all. Okay. Oil market. Oil's chopping around here, and I actually have some notes in the oil market. Let me just give you some numbers. Okay, here's what I've got. So oil is weak, and if the market, stock market, for example, continues lower, I believe the oil market will stay under pressure, and I actually have the first downside target from this point, a new first downside target at 49.5. And beyond 49.5, if we did not firm up and close the day above first hourly and then the day above 49.5, then we could see the market trade down in the mid 40s. We'll call it 45 once again. So, and that would basically be, it would be your double bottom from earlier in the year, but this chart doesn't depict that because that was a different contract. This is the August contract. Back then, I think we were in February. So the numbers or the chart looks different, but that's the number. So I'm not looking to go long in oil. I'm actually looking for a pattern develop to potentially take a short trade. And if we get another couple of sideways days like this here, and if we get something that looks like this, another one here. Sorry, it's not straight. Something like this, okay? Not straight drives me nuts, folks. I apologize. I just can't help myself. It's called OCD, and there's nothing I can do about it. If we get stuff like that, then I'm going to look for a move down lower, down to the 49.5, and potentially lower than that. So that's the story in oil. Does that mean we can't reverse higher? No, of course not. But this is what I have in my calculations and my work. Usually, and you've seen me, heard me do this before, usually when you get a big down move like this, usually you get some of this sideways movement. And if you get the sideways movement, you normally will get another move, sometimes and a lot of times equidistant to this move here. Now, I'm not necessarily looking for that in one day down to 45, but anything's possible in this market. This market is very, very touchy-feely right now, and I'm not just talking about oil. I'm talking about the whole thing. And you'll remember that I've been telling you that I think there's one more rally in stocks, and I still believe that, believe it or not. I just don't know what price it's going to come from. But after that rally, and that may take us, let's say that rally starts next week or later this week, something like that, and it lasts for 2 or 3 weeks. Because remember, I do still have a weekly bottom in stocks. I forgot to mention that before. A weekly bottom in stocks is important. So we're putting in that weekly bottom now, and that just lower prices are coming, or lower prices have come today, and they may come tomorrow. But make no mistake about it, the weekly bottoms are much more stronger and much more predictable than the daily bottoms. So a weekly bottom in stock, and by the way, if the weekly bottom in the stock market fails, and the S&P fails, then we're going much lower. And that's why I said that 1975 in the futures is your line in the sand. Any daily close below that, and there's something else developing, and much lower prices are coming. I don't expect that right now. I expect the weekly bottom to play out as they normally do. Okay, but back to oil. So with that, as we put in this weekly bottom in stocks, obviously oil is under pressure, and I expect crude oil to trade lower, and that's just the facts as I see them in the crude oil market. Okay, so hopefully that helps. You have the numbers, and we'll see what happens from here. The bond market. So we did not get our daily top in the bond market. This is TLT. We are staying now above the 50-period moving average, which is relatively bullish. However, I'm looking at the actual price of the 30-year Treasury bond. Let me go to my notes here, and I just need to bear with me. 154. Okay. Okay, I'm going to show you something. Okay, I don't know if any of you track the actual 30-year Treasury bond or not, but I'm going to put a number in, and the number is going to be the line in the sand where I still think we're going to see lower prices unless we close the day above this number here. Okay, and that was actually the high of the day. These numbers are no longer important. Okay, I was using those before. Now, if we close the day above this number here, 154.23, then I'm wrong about the daily top, and there's higher prices coming. However, you'll notice that there's 3 large up days in a row right here. And a lot of times, when you see a I call it a 3-bar surge. Sometimes they've been called 3 soldiers in the world of technical analysis or in the world of traders. A lot of times you'll actually get not necessarily a reversal, but sometimes you will, but you'll get a pause, just like here. 1, 2, 3. You got to pause for a couple days, and then you're resumed. So I'm expecting the market to pause or pull back tomorrow, and that may be the start of the pullback I was looking for, and we'll have to see what develops from there. But I'm just giving you some of the inside baseball on how I'm looking at this market and my secret numbers in the bond market that I just gave to you. Okay. I think that's it for the bond market. There's really nothing else to do other than to make notice that the 50 moving average will be support, but that number I just gave you at, what was it, 154.30, 154.23, 154, yeah, 154.23. That number is ultra important. So if anybody trades in that market, then just be aware of that number. It's interesting. Okay. So let's go to the dollar, and we never quite got up to my level at 97.75. We hit a high of 97.45, and shame on me. I guess it was either a miscalculation or the market didn't pay attention to my calculation. One of the two. Either way, sometimes they do, sometimes they don't work out. This one didn't seem to reach my number. However, overall, I still think there's lower prices coming in the dollar. As you know, from a long time ago, I was never ever convinced that this number here was going to be the definitive low, and I'm still not. Although the market is trading okay, and it's above the moving averages, so the market's not acting weak. However, I'm just not sold on the low. And if you look here at a longer time frame on the weekly chart, and I'm sorry for the mess on the chart, but this is translated over from the daily and the monthly, by the way. This is bearish behavior. So all we're doing is, if you look at the weekly, all we're doing is going sideways after a big down move. And a lot of times, just like I've told you before, you get one of these moves here, down here, and then you see one of these. Not a straight line, I apologize. But, what happens is that is a typical move in markets, okay? Here, here, here. All right, so it seems to be that could be developing on a weekly chart basis. So we'll have to see how that develops. But back to the daily, in the daily, there's nothing telling us we can't see higher prices yet, but you're going to have a dickens of a time getting through 97.75. That much I can tell you. Okay, we may get up there, but you're going to have a hard time getting through 97.75. Okay, that's pretty much all I have in the dollar. I don't have a pattern telling us one way or the other. We're kind of in the middle of this range, so until we see something develop, I'll give you a more definitive trade when I see one developing. Okay, let's see. How about, since lately I've been talking about, I always bring up the copper. I always hit the wrong symbol on my chart, and I bring up the copper contract by accident, so please forgive me. See what I was saying last night? We closed below this low, okay? And once we closed below this low, I said you don't want to be in that trade, and you saw more downward pressure today in the natural gas market. So, whether or not we go back down to double bottom here or not, it remains to be seen, but that's just the way I trade. And when I see these big up green candles or, big down red candles like this one, until we close above something like this or until we close below something like this, then I'm going to be, I'm going to be bullish the market unless we close below this, and I'm going to be bearish this market until we close above this. Now look at the fake out here. Here, on this day here, we closed above it and then immediately reversed and went lower. That's just the way it works. I mean, sometimes you get, sometimes you're right, sometimes you're not. But these are the probabilities as I've been able to trade them through my entire career. And again, you're never ever going to win on every trade. But as you know from listening to me for a long time, or most of you from a long time, when I tell you these things and I show you this, they play out more than they don't. Sometimes they fail, and that's just the way markets work. It's almost like sometimes you're in a trade and the market knows you're in the trade, so it immediately goes the other way. How does it know that? It just does. It happens to me. It happens to you. It happens to everybody. The minute you enter a trade, all of a sudden the market went the wrong way. It over and over again. I can tell you that I would bet, and I've never tracked this, it's impossible to track, but if I did track it, I would say 75% of the time, the minute I enter a trade, I'm out of the money immediately. It's just uncanny how that works. But nevertheless, you have to be aware that that's just the way it works. And as long as you believe in the system that you're using, and you believe in how you read markets and the strategy you use, and everything I show you is my system and my strategies. For example, when I tell you that I don't want to be in this market on a close below this low, I'm not saying 100% of the time it's going to work out, but what I am saying is 75% of the time it is going to work out that way, and I just don't want to be there. That's a system that I've used for a long, long time, and it works a lot of the time. It just works 75% of the time. So that 25%, you just lick your wounds and you move on. But think about it like this. If it works 75% of the time and I keep my stops tight because I know where I'm wrong, that's the whole thing about this business. And I've taught you this time and time again. When you know where you're wrong, you keep your losses to a bare minimum, and you're going to win much, much bigger most of the time than against your smaller losses. And that's how you make money in this market. Even if you win 50% of the time and you keep your losses extremely small by knowing where you're wrong, instead of taking a trade and turning it into a long-term investment because you're hoping it comes back, right? We know that one. We've all done it. Hope is not a strategy. We know how that works. It doesn't work. So when you keep your losses to a minimum and you, in your winnings or your winning trades, win way more than your losses are small, I don't know if I said that right, but you know what I mean, then that's a winning recipe. So even if you're a 50% winner, then you're a huge winner and you can make a business out of this business. Okay, so that's just the little trade lesson for today. And as you know, all the stocks are down today. There's no point in going over all the stocks. They're just down. We're going to have to see a market rally for them to get any kind of a bid underneath the market. That's just the way it is. These things happen, and when markets do this, everything gets taken out behind the woodshed. Nothing gets spared. In fact, today was a confirmed downtrend all day. And by the way, you'll know that the NYSE was closed today. I'm sure everybody knows that. And the reason it was closed, they had some kind of an outage. We don't know why. Whatever they told us on TV is not right. It never is. They'll never tell you the truth. What I would like to know, and here's a little soapbox. I might as well have a soapbox for the night. My soapbox is, each and every time something like this happens in whatever index or exchange it is, whether it's the NASDAQ, whether it's the NYSE, or any of the other indexes or exchanges, they always make it a point to tell everybody how they're going to make additional investments and fortify all the equipment and the software and have fail-safes and backups, and they have a backup data center. I'll have you know that the NYSE has a backup data center in Chicago, and they didn't use it. I'd love to know why. The whole purpose of a backup data center is to fail over to that data center almost in a flash. It's supposed to be as seamless as it can be, as close to seamless as it can get. And they didn't use it. And I'd like to know why. And my theory on that is they couldn't. The issue was much larger, extremely large, than they'll ever let on to be. My guess is that something that they did, whether it was a software upgrade or whether it was a breach of the system, who knows, but I think it impacted the backup data center as well. That's my theory, because you'll also note that United Airlines had an outage today as well, as did, I think, the Wall Street Journal. Folks, that's not a coincidence. Something was going on out there, and you and I will most likely never know what happened. We'll hear rumors, and there'll be speculation, or they'll brush it under the rug. One way or the other, something was going on today, and it's not a coincidence that those three entities had these outages today, and the NYSE couldn't fail over to their fail-safe backup data center. It's just not a coincidence. It doesn't work like that. It's there for a reason. It cost probably $100 million or more to build that backup data center, and they didn't use it. I don't buy the story. With that, I'm going to leave it there tonight. I'm David Frost, My Strategic Forecast. Thanks for tuning in for another episode of Common Sense Market Analysis.